Hey, welcome back. Guys, 1 month ago, I discussed building a portfolio that I felt addressed some of the biggest bottlenecks in the entire AI trade. So I invested $10,000 into a full AI stack. And just let me remind you what that looked like. You can see the pyramid on your screen. I invested in everything from compute to memory to networking, connectivity, and ultimately the AI infrastructure build out. This was a video I posted right in the middle of March. You may remember it was titled The $10,000 Pyramid. If you haven't had a chance to watch it, I encourage you to go back. Because at that time, I felt that everyone was just over-focused on the compute side of the trade. There was so much noise around GPUs, NVIDIA overall, and there were massive plays, just underappreciated plays at the time that I wanted to focus this channel on. I wanted to highlight some key players in networking, memory, connectivity, and ultimately the cooling side of the infrastructure build out, because there's real value in these companies within the market. So today the results are in. 1 month later after that investment, I want to dive into the results and share with each and every one of you on the channel, because guys, they are way better than I actually expected them to be. So let's dive in and show you what those results look like. We can see clearly on the screen, 1 month later after this investment, a 25.3% rate of return on my $10,000 investment, on my AI stack investment that I just went through. Guys, that is a massive growth overall. And you can see across the board, no matter what company, each and every one individually drove that performance of all. Some more than others, and we're going to dive in and talk about it. But you can see at the bottom, from a $10,000 investment 1 month later to now over $12,500. I'm going to dive in and show you each and every one of those investments. Who were the big drivers this last 30 days? What was the reasons for that? If you haven't done it already, guys, hit like, hit subscribe to the channel. I mean, I think the fact that I just demonstrated a 25% rate of return in 30 days should validate or make me deserve to get a subscribe for you out watching, because there's value and insights that I'm going to give you on this channel that you just don't want to miss. But I want to go back and just provide some context first, because guys, we are over, we're maybe about 5 subscribers short right now of the 6,000, but we're going to make our goal for the month of month of April. We're going to smash it. But remember, I put out this original $10,000 pyramid video in the middle of March when we were right about 4,000 subscribers. So we have gained 2,000 subscribers since that video. Huge thank you to each and every one of you for joining this channel, supporting this channel. But I want to give some context, because just having a green portfolio is great. It makes us feel good. But we have to ask ourselves the question, did we actually beat the market? Or did the portfolio just rise because the market had a great rate of return in those last 30 days? And that's what I want to dive into and show you. I think you won't be surprised, because we know how the market has done over the last 30 days. It wasn't 25% at all, but not only did our AI stack investment that we built here on the market signal channel, did it beat the indexes? It smashed the indexes. As you can see, if you look at the Nasdaq in the last 30 days had a 7.5% return. The S&P 500 had over a 7.5% return, and the Dow Jones had just about a 7% return. Where the AI portfolio stack that we built together on this channel, it had a 25.3% return. And the reason why is because this investment had full exposure to all of the bottlenecks across the AI trade. It really spread the investment across key companies in each of these areas where we saw significant bottlenecks. The Nasdaq is a broad tech exposure. The S&P 500 is more of a general market strength, and the Dow Jones is kind of the traditional economy. And guys, let's not kid ourselves. For a 1 month for an index, about 7% to 7.5% is a really strong performance overall. I mean, those are incredible runs for a broad index. But our AI stack that we built together, it smashed all 3 of those. It was triple the performance of the Nasdaq. While the rest of the world was buying the market, in this portfolio, I focused on buying specific bottlenecks overall. We identified that you can't have an AI revolution without companies that help compute, help build the compute, give you the memory, the networking, the connectivity, and ultimately the cooling that keeps everything together in the AI infrastructure build out. This is exactly why this type of specialization of investment, or this specialized portfolio that we build, is exactly why the $10,000 investment we started with is now over 12,500 in 30 days. The broader market is still trying to catch up to that rate of return. But I want to dive into each individual investment, show you their rate of return, talk about what the catalyst was over the last 30 days, and then give you all my ultimate outlook of what I think we may see for the month of May. But let's start off by talking about the hyper growth part of this portfolio, which is the connectivity layer. This layer was the massive alpha layer for the portfolio in the last 30 days. The companies that I'm going to discuss, which are Applied Optoelectronics as well as Astera Labs, they are building or solving the physics wall of AI networking right now. Let's dive in and start with Applied Optoelectronics, because you can see you're going to be wildly impressed when you take a look at that. 62% return on my investment in 30 days with Applied Optoelectronics. Look at the graph underneath there. You can see the massive growth rate overall. The reason why, what's been their biggest catalyst, I would say, I think it's the realization from the market that the 800G networking is old news now. Every new Vera Rubin rack requires a 1.6 terabit optical transceiver. So Applied Optoelectronics now just announced a massive 90,000 square foot expansion in Texas. They're going to have a goal of producing 700,000 units per month of these transceivers. So this company is literally pivoting itself. They're shifting from a component maker to a high volume manufacturer of these transceivers. These devices, these transceivers, as you guys may know, they turn the GPU data into light for the hyperscalers. The hyperscalers are terrified of supply chain delays in Asia. So having them be a US provider as well is a massive play, a massive bonus for this company. And with their target of 700,000 units per month, they are moving themselves, are starting to position themselves as the primary US-based beneficiary of the optical supercycle overall. This company has been massive. We've seen the optical, whether it's Coherent or Lumentum, or now Applied Optoelectronics, have just been huge over the last 30 days or so. So that's the first piece that's just been a massive return. And let's talk about the second side, which is the Astera Labs. You can see Astera Labs had a 41% growth in this time frame. Look at their graph. Look at that steep rate of return right about the end of March to the first half of April. 41% is huge. And the catalyst for this company is the ramp up of their Scorpio smart fabric switches. So as AI clusters hit the 100,000 GPU mark, the data congestion we see is a real concern. It's the real enemy overall to the data centers. The data centers are starting now, as I mentioned, to scale beyond 100,000 GPUs. The signal starts to degrade over distance. Astera Labs, their chips are the secret nervous system overall, and that ensures that the PCI Express, the 6.0 signals stay clean as they move. Without Astera Labs, those expensive NVIDIA chips would just sit there waiting for data. They aren't just selling chips anymore. They are selling the intelligence that manages the flow of the entire data center overall. So that was been a massive kind of move for the portfolio. Those companies right there were huge growers. But let's shift to the compute side. So we're talking about the investments that I put into AMD and NVIDIA. Any guesses who is the bigger grower in the last 30 days? Drop it in the comments below. But let's dive in and take a look at the first one overall. So the first one I'm going to talk about is AMD. AMD, no shocker here. I'm not gonna make you wait. It outpaced NVIDIA. AMD had a 41% return on investment in the last 30 days. Look at that growth rate overall. You can see on the chart below. The catalyst here, no shocker. I think it was right in the middle of March. AMD signed that massive memorandum of understanding with Samsung to secure HBM4 supply for their upcoming MI455X GPU. And this mattered to the market because it addressed the biggest doubt that investors had with AMD. The doubt was, can they actually build enough chips to compete with NVIDIA? And by locking in this memory supply for 2026 and 2027, AMD proved that they should need to have a seat at the table for the $1 trillion infrastructure cycle or build out from the hyperscalers. Investors are betting on AMD as the value king for inference, allowing companies to run models at 40% less costs than NVIDIA's peak pricing. AMD's had massive moves in the last 30 days. And you remember when I built this stack, I said we have to have a hedge against NVIDIA in the market. We can't just put all of our chips on that one investment. I'm so glad we went with AMD as part of this portfolio stack because they gave us massive returns. And now let's talk about NVIDIA overall and what they were able to show us in the last 30 days. So almost a 10% return, 9.77%. We know NVIDIA is just starting to pick up steam in the last few weeks. So I think we're going to see even more growth for them as we move into the May timeframe. But for almost 10% for a company like NVIDIA, I will take it in this portfolio. The biggest catalyst for them, obviously, is the shift from Blackwell to the Vera Rubin era. And since the March 16th GTC keynote speech from Jensen, the market has realized that NVIDIA is moving towards a system on a rack model. They aren't just selling GPUs now. They are selling the Nemo Claw as well, the software operating system that makes AI agents actually work. So the market is slowly pricing in the reoccurring revenue that NVIDIA will receive from these software licenses. And that revenue is a much higher margin business than just selling the silicon. So huge moves overall for the compute side as well. I wasn't sure that this would have the most massive part of the growth. These are it was the necessity, I would say, to have within the pyramid. But to see a 10% from NVIDIA and 41% from AMD, I couldn't be happier with that investment overall. So let's jump over next and talk about the next phase, which is the networking side of it. So here I want to talk about Arista Networks as well as Broadcom. And first I want to dive over and take a look at Arista. So Arista overall, you could see a 25%, just about a 26% growth. And you guys have to remember that the networking side, these two companies, why I selected them is because they're kind of winning the standards war right now because they're making the AI clusters easier to build for the hyperscalers, easier to build for the compute giants like NVIDIA. Without these solutions, there would be so much more complexity overall in making these data centers successful. So Arista Networks, 26% return, we'll call it, in 30 days. Massive growth. I mean, all of these guys, these graphs have just been massive. But the biggest catalyst they have is they showed the market their demand by doubling its AI networking revenue to a target of $3.25 billion for 2026. And this mattered to the market because it is a clear picture that the InfiniBand versus the Ethernet is a turning point overall. Big cloud players like Microsoft and Oracle are significantly expanding their utilization and relationship with Arista to use their open Ethernet standards because they can't scale the NVIDIA proprietary InfiniBand fast enough. Arista is the undisputed leader of this shift. They are essentially becoming the Cisco of the AI era. And if you remember in my original video, that's exactly why I selected them as well. I even called them out as being the Cisco of the AI era, and they proved to give strong returns in the last 30 days. And then let's take a look at Broadcom. Broadcom, again, also a 26% return on my investment in this last 30 days. Broadcom, their biggest catalyst, I think, is the multi-billion-dollar expansion deal with Meta. You may have seen it, but they have agreed with Meta to build their METIA, or the Meta Training and Inference Accelerator. Broadcom is now the undisputed custom chip architect. Every time Meta or Google wants to stop paying the NVIDIA tax by building their own silicon, they have to partner with Broadcom and pay them to design that approach, that custom approach. So Broadcom is a huge necessity, a massive play, and a great kind of custom partner for the hyperscalers, which I think we'll continue to see more of as we move forward. And this is such a great investment to have in the portfolio. All right, next I want to move to the last layer, which would be the foundational layer overall. So this is going to be the technical picks and shovels. These are the two companies that are left, which is Vertiv and Micron. And so these are the companies that provide the stability and the physical requirements of the stack. The first one I want to jump in and talk about is Vertiv Holdings. And so Vertiv had a 15% increase. Really nice growth. You can see they kind of dipped down towards the end of March, but then had that massive expansion back up overall. And the biggest catalyst right now for me for Vertiv is the backlog that they have. Their backlog hit a record $15 billion. That is 100% plus year over year for sales and that they have sitting in the backlog right now. This is a huge signal to the market that we've hit the physics wall. Air cooling is dead. Vertiv is the only company, with the modular liquid cooling tech that is ready to handle 100 kilowatt plus racks. They are the literal landlord of the AI data center, and they ensure, and their tech ensures, that these massive systems don't literally melt down because of the heat. Vertiv is a huge partner overall and a significant company. And then the last one I've spent a lot of time on this channel talking about, which is Micron. And Micron in this 30-day didn't have as much of an impressive growth as the others. They were probably more of a laggard compared to the others in the stack overall, but their fundamentals are rock solid. I'm not concerned with Micron at all. The biggest catalyst for them in the last 30 days was this confirmation that their HBM4 is 100% sold out for 2026. The revenue is effectively guaranteed in this portfolio. So that makes them a huge defense against any sudden market volatility that my investment may see, that they have revenue visibility through 2026 and into the 2027 timeframe. It makes me feel very comfortable with being able to protect against some volatility that we'll see in the market. As I mentioned, they have been a lagger. There's no question about it, but their fundamentals are rock solid. I'm not concerned. As I mentioned, they have transformed the memory sector itself from a cheap commodity into a scarce, high margin strategic asset. And they are a critical asset to the entire US story, the AI build out story in the US that we're seeing. And they are a huge beneficiary of the CHIPS Act. You can't run a Vera Rubin GPU without Micron's memory. This is a low volatility, high certainty play sitting at the base of my investment pyramid overall. I love Micron, as you guys know. It's a huge part of my entire portfolio overall. But so as I wrap up this video for all of the viewers out there, I would say, just as a recap, a month ago, we built this full AI stack because we just felt there were bottlenecks in the market that we could take advantage of. We put 10,000 into the investment, and now it sits at over 12,500. We beat the Nasdaq by 3x. It's because we didn't just buy the cloud. We bought the constraints. We bought the bottlenecks within the system, and we're investing in the physics of the AI, of AI, not just the big names that we hear about in the headlines. As we move into May, we need to keep our eye on the test time scaling. This is the next big hardware trend, and it aligns with the inference compute explosion that we're seeing right now in the market. As AI models will start to think longer before answering, this will require even more compute, memory, and networking from companies like NVIDIA, AMD, Micron, and Arista, companies that are built into this portfolio. So this month's performance, it proved that the AI trade is not a one-stock show. By owning the whole stack, like we demonstrated in this past month, we've been able to manage and we've been able to take advantage of a massive ride for companies that are in the optics and the networking space that many people may have completely missed. The plan moving forward to me is obviously to hold these positions. We are moving into an agentic era where the demand for tokens will significantly increase. If you want to see if this stack hits the 15,000 mark at the end of May, make sure you subscribe to the channel. Make sure you turn on your notifications. Make sure you don't miss that video in a month of now when I post the next update. But guys, take care. Let me know your thoughts below, your comments below. I answer every single one of them, as you know. I hope you have a great Saturday, and I look forward to seeing you in the next video. Take care.